Okay, I dey record from my own phone now so that maybe we'll figure the recording when we finish. So you say you know it be market structure, abi?
Mm.
Wetin I dey do here be say I dey show you things wey you go need to follow up with. Most say you just go chat, you wan go follow, you wan find wetin dey happen. Because I wan tell you, most of these concepts we dey learn no be because say we dey like try show you wetin to do. It's basically to give you an idea of what to follow up with and how to follow up with it. You understand? So the first thing you
Yes,
wan go
sir.
find na wetin the market structure dey do, because the market structure dey interpret the trend. The trend just be like the direction. How e be today, na bullish abi na bearish. Like you wan first know that thing first. What's the direction? That's what market structure is all about. You understand? So let's go to the chart. Show me your chart, then show me what you identify as market structure on the chart. Clear all those things first.
I
Okay,
don't clean up.
sharp. Now as you see the chart like this now, identify the market structure. First of all, go to the higher time frame. We know they start analysis from 1 hour time frame. Always, if na the beginning of the week, like today na Saturday, if na Monday, wey dey start or weekend like this, always start from the weekly. Because you wan understand the market
Okay.
structure, so you need to see the higher time frame market structure to make you know the direction of the week. Make you know wetin wan happen this week. You need to first start from the weekly. So if you go the weekly time frame, more see wetin the market structure dey do for the weekly. We get that direction, we get the swing point of the weekly, then we come down to the daily time frame.
Okay. So make I go weekly.
Yes, just go weekly time frame. Sharp. Now to you, wetin be the market structure here? What's the trend? And zoom in a little bit. Zoom in.
Uptrend.
No be like
It is uptrend.
make am longer a little bit. The way you take make am fat, the candles no dey show more details. I no say make it too zoom in, just sharp. Now you say don't forget say yes, we dey an uptrend. This is a bullish market, but no forget say e dey the weekly time frame. Every single candle wey dey see for this time frame na 1 week. 1 week wey don already pass. You understand?
Yes.
Every single candle dey see here na 1 week, and wetin you wan trade fit no take you maybe 2 hours, 3 hours, sometimes just 1 day. So e no go even dey relevant to wetin wan happen for here. So you no need much information from here. You just need to know how e be for the past 2 to 3 candles, because na those ones now dey tell you wetin dey happen in the past 3 weeks. You understand wetin I talk?
Okay. Yes.
So wetin you wan do be say, once you don know say yes na bullish market, now you need to know say momentum dey the bullish side. Mean say like na the good bulls get power pass.
Yes.
Take these pairs like football. The blue guys na Chelsea, the black guys na PSG. So wetin the market structure dey talk say e dey bullish mean say Chelsea dey in charge. But at the same time, e dey bullish on the weekly time frame. But the last weekly candle, is that a bullish candle or a bearish candle?
A bearish candle.
Thank you. That's indirectly saying last week was bearish. But shey the trend is bullish.
Yes.
But now last week was bearish. You see what I tell you, say every single candle for the weekly dey give you weekly insight. So you no need to dey look because say and they say the trend is the market structure. Market structure dey interpret the trend. The trend can be a single candle. Like now going to the daily time frame, I fit tell you say the daily would be bearish because last week was bearish. The range we'll be looking at on the daily time frame will be bearish. You understand?
Yes.
So now more identify the swing point. Write that number 2. Number 1, market structure. Market structure / trend. Put am like that. Or you know wetin, make number 1 higher time frame. Number 1 higher time frame. Number 2 market structure / trend.
Number 1 higher time frame.
And then number 2 market structure and trend. You need to know the market structure and the trend.
market structure
slash trend. Now, why we say no be trends, just trend, one trend, and one pair. I leave the market structure because now multiple time frame. The fact say we start from time frame, so indirectly we're saying multiple time frame. Now, number 3, swing points. Right under swing points. Number 3 na swing points. Okay. Now, market structure and the trend, they form movements. I suppose we annotate, make us see. Market structure and the trend, they form movement. This movement, they form highs and waiting, lows, abi?
Yes.
These highs and lows, they form the higher high, lower low, higher high, or higher low shade, that kind of stuff. Yeah. Each point, they call am swing points. Each point of high or each point of low, they call am swing points. You understand me?
Yes.
Now, mark out the current swing high and swing low of this market. Which high would you consider? The range. Mark out the range of this market. Since it's a bullish market, ma show you one trick. If you want to understand what they do, but turn on to line chart. First, before you mark anything, turn on to line chart. Ma show you how to do. Ma show you cheat code. Yes, the line chart, the line. Just tap the line. Now use that long line. Mark out that high and that low.
This one, Abi?
Yes, mark out that high.
This one?
Yes. Mark out the low. Okay. Now you see, we just mark out the major range. Every other thing they happen within that range. That high where you just the mark now fail to break the previous high wey create am. That's the problem. E never dey go, up. And then the one way face down now but almost break the low. So indirectly if you break that low. And for this Malaysian, for support and resistance, each of these high wey dey see here na support or resistance zone. You understand? For na support and resistance zone, but na key levels be that. Na be swing points. You're marking out swing points. You get? So now inside this range like this now, but now where market dey at this moment, one of these guys are going to get cleared out, either the low or the high. Do you understand? On the previous range, you can see that the low was what got cleared out. So now your target now which one you fit trust to join, go clear the other one. Like which place if you put your money, if you buy or if you sell for, now you won't know. You understand? So turn on to candlestick again. Before we start read candlesticks now, turn on to candlesticks more see the swing points so that we can get where we can call our focus for on the lower time frame. Sharp. You see what just happened now. Now you see waiting now weeks, but to me weeks now, all these weeks now, you know what to be weeks now be for candlesticks.
Yes, where price don't reach.
Now where price reach before that particular candle close. So most say that candle will tap that up and the one will tap that down. Now high and low of those previous weeks. You understand? The first week, that week first go up, like say it won't go up, it can't come down, can't finally close bearish. That can do I talk about, no, leave that in there. I talk about that black, the doji, the rejecting doji from there. The one we test them. The one we test them there, the black, the bearish candle we test them, come back down, we reverse.
I see am.
No be that bullish candle they touch. I mean the rejection, the weak we reject. Yes, that one. That in a mitigation. It mitigates that point because don't forget we did the weekly time frame. If you go the lower time frame, other block go there. You understand me?
Yes.
order block go dey there na key level na make I tell you say swing points na key levels na where either market go clear or market go react from na key levels, you understand. You see the one wey do the next week, that one ma react to a major area too. So this market dey inside the range right now, e dey undecided, e dey both sides. Na gold be this o, abi?
Yes.
But now mo come, that's what's happening on the weekly time frame. Mo come the last two candles, which is that order block wey dey form there now. Highlight the order block. If you know wetin be order block, highlight the order block you see there. Sharp. No, to drag am too much like that. Just push and come back small. Sharp. You dey game. Now I wan ask you one question. Now wetin make you call that your order block?
Because na the last candle before the impulsive move.
Okay.
Downward. Na the last bullish candle before the impulsive move downward. So na bearish order block.
Sharp. That means another was placed there wey cause that reaction like that. So that's a bearish order block. Sharp. Another way that you can confirm order block be say the candle, the momentum, that impulsive move engulf that candle. Is this the impulsive move close below the candle wick? That's in a confirmation. You understand? Like you see that blue candle of that swing high, that blue candle, that swing high, we go bullish there.
That is the one way mark.
The one we mark from the key level. You see that long bullish, that blue candle there.
Yeah.
Highlight them. Don't like say one draw like say na order block. Thank you. Now wetin make, now you don't do a hand sharp. Now wetin make that one no be order block for weekly time frame?
Because I don't understand the question.
No too stress yourself. I just dey draw your attention to am. You understand? I no dey expect you to know am too. I just want to show you something. You understand? I want draw your eye come aside. So if you don't know am, no stress yourself. Let me know. I go explain for you. You dey get me?
Yes.
So if I ask you, I did ask you so that I go draw. I want to show you something based on order block. You understand? That candle now. Why you no go call am order block for the weekly time frame? Why you no go say that in an order block? If you say na the last candle before the momentum, say that bearish candle, those two bearish candle wey dey there na bearish momentum. So wetin make am you no call that one order block too?
Because himself na impulsive move.
The bullish one, the one who draw inside, no be impulsive move. No be impulsive move go up first before the that bearish impulsive move come pass am. Power come pass power. That one, wetin just dey see there be say the next two bearish candle power no reach to pass that other one power. You understand me? One single candle suppose engulf one single candle, at least two. You understand? If two dey engulf am, that no be order block on that time frame. You understand me?
Maybe the meaning of engulf na just to like pass am.
Engulfing. You know wetin be engulfing candle?
No.
Engulfing now, but na when the next candle close above. If na bullish candle now, but e close above the like you know say bullish candle now dey end for the up because e dey bullish. So that's where you call the close. Na the down be where you open. You dey understand?
I understand.
Bearish candle now na the up be the open, na the down be the close because e dey face down. So when they say the next candle engulf the previous one, but they try tell you say if like that inner order block now, but where e close na up shey,
Yes.
the next one come
Yes.
open for that up, come bearish. That one own momentum engulf that previous candle low. E engulf the wick too. You dey see? Engulf e mean say im cover am in weight pass the other one. Na be wetin e call momentum.
Okay.
Now that one wey we first draw, the big one, you see say one single candle momentum no dey enough to engulf am. You don understand wetin I talk by engulfing now?
Yes, I understand.
Now make we do another example. That other one wey dey for back there, where that long bullish momentum dey for back, yes, that last bearish candle wey dey in between there, highlight am. This one na back. Before we go back to the analysis about that swing, I just want to show you that order block issue so that you go understand wetin be IPA, you go understand wetin dey make order block, and then you go see, at least before we continue the analysis, you go understand some kind of things. Now that candle you call an order block.
Yes, I go call another block.
Why?
Because the bullish candle engulf am properly.
Okay, sharp. So that was a bearish move in the wrong direction before the main bullish momentum happened. But the candle no look like other block.
It no look like other block. Yes.
So if you go lower time frame now, you fit go see something else for there, abi? But that candle now get imbalance above am from where the next that bullish momentum happen, abi?
Yes.
That imbalance now dey show the momentum of the engulfing. Yes, that imbalance. They show the momentum of the engulfing, where that candle carry engulf the previous one, shey. Which logically makes that particular candle another block, even if no look like other block. You don't understand what I mean?
Yes.
So instead we call it an IPA candle. So you don't understand the difference between an ordinary order block and IPA. Now the same thing. Just say IPA look different from an ordinary order block. An IPA candle price fit mitigate the opening. Price fit no reach the ending main. And sometimes price fit mitigate the 50%, just like normal order block. But IPA candle now, they always dey under imbalance because the engulfing and momentum they always dey there. Now wetin dey classify am as IPA candle. So the IPA candle now, they always get order block inside am for lower time frame. Because say na order block wey they never refine, we dey call am IPA candle first.
Okay.
So when you refine am now, you come become order block. Now what I tell you say you no fit talk say you wan go look for other for IPA candle. Why you go talk that kind of thing? Wetin happen to wetin dey your front?
So IPA candle na other block for higher time frame.
Sharp. Wetin I try explain for you be that. It's as simple as that.